studying your last two. I swim med when they turned in. The staring out to mute. And can learn the pole that sunk he died.
Schedule 50 introduces a completely different topic from Schedule 8. Instead of reporting capital assets and capital cost allowance, Schedule 50 reports information about the corporation's shareholders. In other words, it tells the Canada Revenue Agency who owns the corporation. Every corporation has one or more shareholders. A shareholder is an individual or another corporation that owns shares in the company. Those shares represent ownership of the corporation. For example, imagine a corporation with 3 shareholders. The first shareholder owns 40% of the shares. The second shareholder owns 35%. And the third shareholder owns the remaining 25%. Together, these shareholders own 100% of the corporation. Schedule 50 is used to report this ownership information accurately as part of the corporation's T2 income tax return. To complete Schedule 50 correctly, professional tax preparers do not rely on memory or informal discussions. Instead, they review the corporation's official records. One of the most important records is the share register. The share register lists the corporation's shareholders and records details about their ownership. Another important document is the corporate minute book. The minute book contains many of the corporation's legal records, including information about share issuances and changes in ownership. Tax preparers may also review share certificates and other corporate documents to verify that the shareholder information is current and complete. Once these records have been reviewed, the information is transferred to Schedule 50. The overall process is straightforward. First, identify the corporation. Next, identify the current shareholders. Then review the share register and supporting corporate records. Collect the ownership information for each shareholder. Finally, complete Schedule 50 using the verified information. Notice that the emphasis is always on verification. Professional tax preparers rely on official corporate records rather than assumptions to ensure that the shareholder information reported on Schedule 50 is accurate. Accurate shareholder information is important because it helps ensure that the corporation's ownership records agree with the information reported on its tax return. The key lesson from this slide is simple. Schedule 50 identifies who owns the corporation by reporting shareholder information and ownership details accurately. Professional tax preparers review the corporation's share register, minute book, share certificates, and other corporate records to verify current ownership before completing Schedule 50 as part of the T2 return. Before a tax preparer can complete Schedule 50, they must first collect and verify the corporation's current shareholder information. The goal is to ensure that the ownership information reported on the T2 return matches the corporation's official records. Let's look at the information that is typically gathered. The first item is the shareholder's name. Every shareholder, who is required to be reported on Schedule 50, should be identified accurately using the corporation's official records. Next is the shareholder's address. This helps identify the shareholder and ensures that the corporation's records are complete and up to date. The tax preparer also records the shareholder's country of residence. This information is important because shareholder residency may affect certain tax reporting requirements. Another key piece of information is the percentage of shares owned. This shows each shareholder's ownership interest in the corporation. For example, one shareholder may own 40% of the shares, another 35%, and another 25%. Together, these ownership percentages explain how the corporation is owned. The tax preparer also reviews the type of shares held. Some shareholders may own voting shares, while others may own non-voting shares, depending on the corporation's share structure. In some cases, The shareholder may be an individual, while in other cases the shareholder may be another corporation. Schedule 50 requires accurate information about the ownership structure, so these details should always be verified before completing the schedule. To gather this information, professional tax preparers rely on the corporation's official records. These commonly include the share register, the corporate minute book, share certificates, and other supporting corporate documents. Rather than relying on memory or previous tax returns, they carefully compare the current records to ensure that the ownership information is accurate. The overall review process is straightforward. First, collect the corporation's records. Next, verify the current shareholders and their ownership percentages. Review the share register for completeness and accuracy. Transfer the verified information to Schedule 50. Then perform one final review before filing the T2 return. One of the most common beginner mistakes is using outdated shareholder information from a previous year's tax return without confirming whether the corporation's ownership has changed. Share ownership can change over time, so professional tax preparers always verify the corporation's current records before completing Schedule 50. The key lesson from this slide is simple. Schedule 50 reports the corporation's shareholder information. Professional tax preparers collect current ownership records, verify each shareholder's name, address, country of residence, ownership percentage, and share information using the corporation's official records before completing Schedule 50 accurately as part of the T2 return. Following this verification process helps ensure that the corporation's ownership information is complete, current, and accurately reported each year. Before filing a corporation's T2 return, professional tax preparers perform one final review of Schedule 50 to ensure that the shareholder information is complete, accurate, and supported by the corporation's official records. Let's walk through that review process. The first step is to review the corporation's records. Rather than relying on memory or information from a previous year's tax return, the tax preparer begins by examining the corporation's current legal records. Next, identify the corporation's current shareholders. Every shareholder who is required to be reported should be identified using the corporation's official documentation. After identifying the shareholders, verify each shareholder's ownership percentage. The ownership percentages should accurately reflect the corporation's current share structure and agree with the corporation's records. The next step is to confirm the share information itself. This includes reviewing the types of shares held, such as voting or non-voting shares where applicable, and confirming that all ownership details have been recorded correctly. Once all of the shareholder information has been verified, Schedule 50 can be completed. However, experienced tax preparers do not stop there. They perform one final review to ensure that all information has been entered accurately before the T2 return is filed. Throughout this review process, they ask themselves several important questions. Have all current shareholders been identified? Are the ownership percentages correct? Have the voting and non-voting shares been identified properly? Are the corporation's records current and complete? Has Schedule 50 been completed accurately? And are all supporting documents available? Answering these questions helps ensure that the shareholder information reported on the T2 return is both accurate and complete. To support this review, professional tax preparers typically rely on several important documents. These include the corporation's share register, corporate minute book, share certificates, Schedule 50, corporate records, organizational charts where available, and the working papers prepared during the tax engagement. Together, these documents provide evidence of the corporation's ownership structure and support the information reported on Schedule 50. One of the most important professional habits is maintaining current records. Whenever ownership changes occur during the year, the corporation's records should be updated so that Schedule 50 reflects the current ownership structure rather than outdated information. The key lesson from this slide is simple. Schedule 50 reports who owns the corporation. Professional tax preparers verify the corporation's current shareholder information, confirm ownership percentages, and share details using official corporate records. Complete Schedule 50 accurately. Perform a final review before filing the T2 return, and maintain supporting documentation for the corporation's ownership records. By following this structured review process every year, you'll prepare more accurate corporate tax returns, maintain reliable shareholder records, reduce reporting errors, and develop the professional habits used by experienced tax preparers when completing Schedule 50.